Neeraj Chadwar, head of fundamental and qualitative research at Axis Securities, joining in with us. Neeraj, very good afternoon. Thank you so much for joining in with us as always on ET Now. And Neeraj, let's just talk about New Year, New Horizon. That's the theme that I'm reading also coming in from the report as well, a very exciting one. Now, obviously Indian economy, we have seen that, has been performing much better than other, when you look at emerging markets. December just yesterday also new highs, today also new highs. What's the story one should watch out for in terms of 2024 from the Indian markets? Is that something that we should see that, this run is going to continue for us?
Yeah. Thank you for having me on show. You rightly pointed out that we are ending 2023 with a positive note, and with the new year, new horizon, we are entering in 2023 with 24 with again a positive note. We continue to believe that Indian economy will be in a bright spot of growth and continue to be a star performing economy in the emerging market basket. Adding to that, the entire corporate India balance sheet has improved significantly this election. So all these events will have a bearing on equity market. In any case, which we firmly believe that Indian economy is rightly placed and continue its growth momentum, and we continue to believe double-digit return. Given the valuations are stretched at current juncture, we believe that bottom-up theme is the best place to identify the stock based on the old economy plus export-oriented stock. So that's why we projected 5 different themes for 2024, which will be having a bearing on equity market.
Right, absolutely. Said 5 themes that you're talking about. If you could firstly just name some of the themes for our viewers, we are just seeing it right now. So, what are you finding attractive in these 5 themes? If you could just tell us in quickly about these 5 themes as well.
So we pointed out based on all the development, our first theme is the manufacturing theme. So we believe that India is on the cusp of the manufacturing upcycle, and based on the policy continuity, the scenario of policy continuity has emerged in last 1 month, and we continue to believe that this after in the formation of the new government, or based on the policy continuity, the capex theme will get more thrust. So we believe based on this manufacturing theme, we identified 4 stock for 2024. These are Pitti Engineering, Archean Chemical, Sensera Engineering, and Amber Enterprises. Our second theme is PSU Bank. We believe that PSU banks are in a bright spot, and they will continue their growth momentum in 2024 also. And under PSU banking theme, we like SBI. SBI is right place for all growth lever. Along with that, the asset quality trend has significantly improving, and along with that, the bank foresee a good return ratios in upcoming years with the ROE of 1% and 16%. The stock is trading at a very attractive valuation. There is a huge amount of headroom available for the valuation to go on upside. So we set a target of 800 rupees for SBI. Along with that, we continue to believe in NBFC space, and under NBFC, we are forecasting, we are recommending Manappuram Finance. Right now, gold financing space is in a very, very attractive space. Gold finance, gold demand, as the gold prices are up, gold and the end user of the gold financing are also doing well. So there is a good amount of AUM growth is visible in gold financing. Along with that, in Manappuram, the company is also de-risking their cyclical gold business to the non-gold financing business, and which we believe that this year the AUM growth will be in double digit. Given the growth trajectory for next couple of years, the stock is trading at a very attractive valuation. So that's why we put this stock in our theme as a NBFC gold financing play with a target price of 205 in next 1 year.
Right.
The
Yes, I'm reading that, but I am very interested in one more thing is that your other theme is that consumption theme also, which you're talking about, right? And I believe you've picked out Westlife Food World. I want to understand 2023 obviously was muted. That's what you're mentioning as well. But, as of now, we're not seeing that rural growth, rural recovery also coming in. So would you more be skewed towards something more on the luxury side also, or something more like something like a Titan? Isn't them more attractive? Because luxury demand, surely that's been the one that has been catching up in terms of trends as well.
Yes, you rightly pointed out that the consumption demand was weak in last couple of quarter, and we have not seen a good the recovery signal. But the demand is expected to improve in 2024. Given under this space, why we like QSR. QSR is the fastest growing space, and which we believe that Westlife Food is rightly placed under the QSR space. Company has set a vision to open close to 600 store by FY27. Currently, they are having 370 store, which majority of the stores are in tier 1 and metro cities. So good amount of opportunity available for company to tap the demand from the wide India. So that is one lever. Along with that, they are driving the agenda of premiumization by launching their fried chicken and McCafe, which by increasing their average value of per ticket size from 200 to 250 to more than that level. So which we believe that right now valuations are very attractive to take a view of next 1 year. One can make a good amount of money in Westlife Food. We set the target of 1,000 rupees for Westlife Food, and we believe that in 2024 demand will revive as compared to what we have seen the muted demand in 2023.
Okay. The manufacturing cycle that you were speaking about, the Make in India projects, obviously the growth opportunity or the addressable market when it comes to the manufacturing space is huge. But don't you think that the run-up that we have seen in all the stocks, the valuations are quite expensive at this moment? Is it a good entry point for any new investor currently?
Yes, correct. So we are on the cusp of the big manufacturing cycle. The first leg of rally, which we already seen in the first leg of stock. Now, what we are identify the stock which are contributing to the ancillary demand of the manufacturing cycle. One stock which we identified, that is Amber Enterprises. Amber Enterprises has rightly introduced their product into fastest growing demand in the case of railway and the mobility space. Now they are contributing and making gang wagons and doors for the newly introduced Vande Bharat train. So a company has also pointed out that this space is growing, and they will double their revenue in next 3 years, which we believe that this space is very margin accretive, and this will drive the EBITDA for the company in next 2 to 3 years. And based on this demand and the growth trajectory which they are seeing, we believe that this stock is very reasonably valued at this juncture, and one can make a good entry point in Amber Enterprises at the current juncture. We foresee 3,700 target price in next 1 year. The next is Sensera Engineering. Again, this company has de-risked this company is the auto ancillary company, and in over a year, this company has de-risked its portfolio, which was earlier concentrated into IC engine. Now they de-risk their portfolio and enter into and in the fastest growing segment of EV, aerospace, and defense. So all these segments are contributing high margin segment, and which brings us the visibility for next couple of years, where they will improve their return ratios. And based on the demand momentum, we are firmly believe that return ratios for this company will likely to improve in upcoming quarters. And based on that, we foresee a good amount of EPS growth in next 3 years, and that will attract the good EBITDA margin improvement and ROE improvement. We set the target of 210 rupees for Sensera Engineering. One can make an entry in this stock, and a good amount of upside potential of almost 20% from the current level.
Okay, I see SBI is also one of your picks for 2024. Now, we do understand that SBI has been a key laggard in 2023 and fundamentals continue to remain positive. Hence, it could be an addition to your 2024 picks. But why not any pick from a private banking space? HDFC Bank has also been a laggard, right, in 2023, right?
We believe that 2024 entire PSU space will continue to ride its momentum. Right now, the entire PSU space is having a 14% market cap as compared to the total market cap of the market, which was earlier seen as 8% only, and the historical average was 23%. So there is enough headroom available for PSU stock to go further from the current level. Also, there is a huge opportunity available to improve their market cap. Given the scenario of stable government and given the scenario of the capex-led growth, we firmly believe that the entire PSU banking space is on the cusp of the cycle, and there is a good amount of re-rating possible, which was not earlier the case. So, given the scenario of stable asset quality trend, improving return ratios, we are forcing SBI to having a ROE of 16%. So that makes a good bet to make an entry into entire PSU banking space, and we are confident about the growth levers for SBI.
Okay. JK Lakshmi, now here you're seeing an upside of around 14 odd percent, but off late the cement space entirely, if you see, has been lagging with lower demand. Prices have been on a downside, and also raw material prices have been quite volatile. So, what is it that you're seeing will change for the cement companies in 2024?
So the cement companies H2 is likely to be brighter as compared to H1. The entire cement space will likely to see EBITDA per ton improvement as compared to H1, especially related to JK Lakshmi Cement. The JK Lakshmi Cement having a subsidiary in Udaipur. So they are ramping up with their facilities starting from Q1 FY25, which will contributing to their volume growth. Given we are seeing a good amount of demand which is reviving in the infrastructure space, and that is ramping up the volume growth, and the company is well targeting to improve their EBITDA per ton starting from currently 700 rupees to 950 to 970 in next couple of years. So this cost optimization practice and improvement in the EBITDA per ton, which makes a case of good improvement in the margin and good improvement to make an entry into this cement space. So that's why we firmly believe that currently stock is trading at a reasonable valuation, and we set a target of 1,000 rupees for this stock in next 1 year.
Okay. Last question, at least from my side. Cyient is one of your IT picks. Now, there could have been more value in large caps also, don't you think so? Why Cyient?
So yes, so we are seeing a case of IT could be the good sector rotation theme in 2024, and it likely to gain benefit more from the US interest rate cut, which likely to start from May-June 2024. Especially related to Cyient is especially placed into the ER&D space, that is the engineering research and development space, and that space is continuously growing. We have seen multiple companies are catering into ER&D space, and their demand is continuously rising because the end user are from the multiple industries, and and Cyient is playing a very significant role in playing a technology partner with all those players. So we believe that this is the fastest growing space. Along with that, the aerospace demand is also increasing. So they are also catering to that demand. So we firmly believe that there is a good amount of doubling the profitability in next 3 years, being the growth revenue continue for next 3 years. We firmly believe that this is a good place one can look at. This is the fastest growing company currently having a market cap of 25,000. If the company sustain their growth momentum, it likely to get a mark of mid cap company also after the SEBI classification. So which we believe that is possible in next 6 months. We firmly believe that given the growth trajectory in a ER&D space, the stock is a good place for the growth movement.
Well, thank you, Neeraj. That would be all. And also, congratulations for beating the index in 2023.